Hey, what's up guys? John here. Did you know there's 10.2 million housing units in Florida and 2.2 million of them are completely paid off and 1.7 million are sitting completely vacant?
No state in the country has more empty homes than the state of Florida. 1.7 million homes in Florida are vacant.
No one's living inside of these housing units. You have to pay attention to something very interesting that's happening because it's going to rewrite real estate in the state of Florida. You're seeing rents beginning to fall.
Apartment rents have been cooling off sharply for several months now.
Median rent prices fell for the third consecutive month, according to Realtor.com.
Insurance is continuing to skyrocket.
More and more homeowners are abandoning home insurance because of skyrocketing costs.
Property owners in multiple states are facing skyrocketing premiums and hard to get coverage.
And landlords, real estate syndicators, and investors that sold their properties in New York and Oakland and San Francisco and LA, Chicago and Boston, these heavy restricted cities during the 2020-2021 era, they sold their assets and they went and bought in Florida. They did so because rents were skyrocketing. They wanted 0% income tax and they wanted a better life. But now all of these investors are getting completely rug pulled because of a chain of events that are unfolding. And in this video, I'm going to break it down for you and show you exactly what's going on. Please hit the like button. When you hit the like button, YouTube will share this content to educate the people about what's happening in the Florida and America's housing market. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description below this video to schedule a free strategy session. Take a look at this. So when you look at what's happening, rents have already decreased 4.15% year over year. This is according to rent.com. 4.15%. So let's take a look at what this actually means. Let's take a look at what this means. Because when real estate investors buy properties, they buy them usually, especially in Florida along the coast, at a 4 or a 5% return. That's what they're doing. So when you look at what's happening here, which is this. Let's say, for example, an investor in New York or LA, they purchased a $10 million deal. They put a $4 million as a down payment. They took out a $6 million loan, right? The monthly debt payments with a 4% interest rate was $19,097 per month. So which it looks like this. On a 4% interest rate, you're looking at a $19,097 loan, right? So this is the loan amount. Then property tax, insurance, expenses, maybe $25K, right? Total $44,000 in monthly debt expenses. It's, let's say 40 units, renting for $18.75 a door. It's pulling in about $75,000 per month. And this figure is based on this right here. 5% vacancy rate, 40% operating expenses, annual net operating income. Annual gross income is $900,000, which is $75,000 a month times 12 months. $900,000. A 5 cap, this would be a $10 million deal. So just to make it very simple. Now let's look at what's happened over the last 12 months and what's unfolding for 2024. Because what we're going to start to see here is all of these investors that are leveraged walk into a wave of pain. And what I think is going to happen is we're going to continue to see rents fall. We're going to start to see a lot of situations that many people would say is far-fetched, it's never going to happen, John, no way. It's going to happen, right? It's going to happen. Look at this. So you're already seeing Miami's population is declining. Why is Miami's population declining? Well, it's because the cost of living is through the roof in the state of Florida. Everything is expensive. Car insurance, food, living is expensive. And so when you're starting to see this and you're seeing rents starting to fall and you're starting to see insurance premiums skyrocket, homeowners are beginning to sell their properties. They're beginning to rent out their homes. They're looking to go to a more cost-effective place. Maybe Alabama, maybe certain places in Georgia. They're looking to move and relocate to try to save money. They're looking to downsize their expenses. And so when you're looking at all of these situations unfolding and the insurance crisis continuing to get much worse, you have to ask yourself, what is this going to mean for landlords? What is this going to mean for investors? Well, these insurance companies, they're canceling policies left, right, and center. They even say right here, Florida is 76% of all insurance lawsuits in America, 76%. Let's look at this. Let's look at what these numbers look like. And this came out, by the way, 2 days ago. So the insured losses in Florida from Hurricane Idalia hit $309 million, right? There was 25,000 claims. 25,000 claims. So you have to ask yourself, what is this going to mean for insurance premiums in 2024? They're going to continue to rise. So let's look at what this deal looks like now with rents dropping roughly 4.5%, right? Rents falling 4.5%. So that's $75 a door, right? $75 a door. Across 40 doors, that's $3,000 a month. That's $36,000 in overall reduction in rent revenue collected, right? Across that, across that rent roll. So this, based on the current 5% cap rate, it's about $800,000 in overall lost value on that asset that they purchased. So if they purchase this deal for $10 million, now it's worth 9.2. But then let's look at what happened with insurance rates. Insurance rates skyrocketed 30, 40%, right? So what does that mean, right? That 9.2 deal, maybe it's worth, because these additional costs will be passed on to the new owner, maybe that deal's worth 8.5. Maybe it's worth 8.6, 8.7, right? But then you have to factor in interest rates went from 4% to 8%, right? So the monthly payment will go from the $19,000 to $29,000. So it's an additional $10,000 per month in overall cost. So to fund, $1 million worth of debt today might be $7,000. So maybe 7,500, maybe $8,000. So you're talking 10 grand, maybe it's $1.5 million, right? So you start to add all of these things in. That $10 million deal might be worth $7.5 million, maybe $7 million, right? And so when you're looking at all of these costs, the monthly cost, the property taxes, insurance expenses, you start adding this up, total monthly cost now, it would be $61,000. And so their profit would go from being $30,000 to roughly $13,000. So you have to ask yourself, what is this going to mean when they walk into this situation here, which is happening? This is happening right around the corner. A real estate haven turns perilous with roughly $1 trillion coming due. So these owners of these properties, when you buy commercial property, 5 units and above, every 3, 5, 7 years, depending on the loan term, right, you have to go back to the lender, and that lender is going to look at the trailing 12. They're going to look at how much income that building produced. They're going to look at the expenses. They're going to look at how that building performed. And then they're going to issue you a loan or not issue you a loan based on what they see, right? When you see a situation, if you're a bank, you see a situation where costs are continuing to skyrocket and they only have $13,000 in profit and it was $30,000, you're probably going to ask them to come to the table with a fat check to keep the deal. But this investor, they already put $4 million down. They already put $4 million down. So the big question is, are they going to come strike a check for $2 million, $3 million? Probably not, right? Probably not. And so because of this, you're starting to see a lot of real estate syndicators. You're starting to see a lot of investors. You're starting to see a lot of pain hit, like Tides Equity, they're having problems. There's another investor in Houston lost 3,000 doors. I mean, there's all these big investors walking into all these problems. You have to ask yourself, how do they weather the storm? How do they weather the storm when we have this very unique dynamic that's happening inside of Florida? When you have these 2.2 million property owners that are sitting without mortgage, and then you have these, 1.7 million vacant homes, these homes in Florida, many of them are owned by retirees, people that have second homes, right? So what are they going to do? Rent out their homes, or they're going to sell their other home and move to Florida, or sell the Florida home and move to their other state, wherever they reside permanently. So they're going to generally have like one of maybe 4 options: sell the home, rent out the home, move to their other state, or move into the home. So one of those 4 options. So out of 1.7 million people, if we step into a real recession, which it seems very likely at this point, you start to look at all the problems we're walking into in the economy. That's one curveball after the next. I'm betting we're going to see a lot more rental inventory hit the market, right? A lot more rental inventory hit the market. And 2.2 million people own their home outright. Out of these 2.2 million people, they may be looking at what their home was worth a year ago, 2 years ago, saying, what, do I really want to sell it at today's, in today's market? There's not that many buyers out there. Yeah, maybe I'll hold on for a little bit longer. What are these people going to do? They're probably going to rent out their homes. So if rents have already fallen 4.15%, right? If it's already fallen over 4%, and this, by the way, came out, let's see here. This came out October 20th, right? So we're going to be, 6 weeks in. They're 5 weeks in, 4 weeks in. So, right, we're walking into this. I believe what we're going to start to see here, it was due to the student loan situation, due to a lot of the problems that are walking to the economy. We're going to see a lot more inventory at the market. Rents are going to continue to soften. More pressure is going to be put on these landlords and investors. Banks are going to be even more tight to lend money, especially as insurance premiums will likely only increase in the coming years. So what is this going to mean? You're going to see a lot of distress. And with a lot of distress comes, a lot of opportunity. You're going to see a lot of investors coming to Florida looking to scoop up the pain. They're looking to buy deals. I don't think it's going to happen Q1, Q2, but maybe Q3, Q4 of 2024, 2025, you're going to start to see a gold rush of investors going to Florida. There's just no other way. I don't see anything else playing out. Unless, for example, interest rates started to soften, wages miraculously skyrocketed and everything went back to how it was, during 2021. I don't think that's likely. I think what we're walking into is a slow erosion of the U.S. economy, and a lot of people are going to make some big sacrifices. But a lot of people are prepared, or they are preparing now to get ready to invest and to take advantage of what will be the greatest investing opportunity in American history. What do you think about this situation? Drop it below. And if you want to fix your credit, you want to position yourself to invest during this great wealth transfer, we'd love to help fix your credit at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. I'll catch you in the next video.